All right, first weekly outlook of the new year, January 6th, and also the start of the 0 to 1 million funding challenge I'm going to be doing together with all of you guys. Weekly outlook is always the same. Based on the higher time frame, we're going to look at which pairs, which asset classes look nice to trade from the higher time frame, and then using those higher time frame ideas, then we're going to drop to the lower time frame during the week to take our entries. First, we're going over the red folders, the news, Forex Factory, and after that, I will go over the pairs I think are very nice to trade this week, and I will personally be trading them as well. Before we dive into Forex Factory, one important thing. It's the first month of the year. It's the first week of the month. Second week of the month, I must say. It's for January 6th. And if you notice the open, high, low, close of a candle, so let's say you anticipate price to be bullish on the year. This is a candle. Let's add 2 wicks to it. This is the open, high, low, close. So we open below here, then price drops lower, creating the wick, and then trades higher and higher, higher to the high of the candle, and then closes. This is how an open, high, low, close framework works. This works on every single candle, works on a 1 minute candle, but also on a 1 year candle. And if you think of the yearly candle, January, we just open. So let's say on the yearly candle, we are down here. So that means if we want to go higher, price or consolidates or goes lower before distributing higher, expanding higher. That makes January not the highest probability month of the year. Just like December, that's up here, end of the year, when you have that high to the close, not the highest probability. The bulk of the volume, the bulk of the move will be, of course, during the year, the middle of the year, when the body of the candle is being formed. That said, we still have amazing opportunities, but I want you to know where we are on the grand scheme. We are in January of a yearly candle. ICT himself says he starts trading from February, and the reason for that you just heard. That's the reason. Cool. Enough technicals. You want to hear what we're going to trade, where we're going to make money on. Today, Euro bank holiday. Italia only. Tuesday, GHF CPI. I have some GHF pairs on the list. I think GHF in general on the higher time frame is not too nice. So probably I will use CPI to maybe reevaluate that bias. I think they're quite consolidating, quite small ranges. I don't like small ranges. I want big ranges because there's more money to be made. Tomorrow we have ISM and Jolts at 10 a.m. That means probably before the open there are not many nice entries, but probably after the open there will be nice entries. Tomorrow Asia with AUD, CPI. Wednesday we have non-formal employment change, unemployment claims, and in the afternoon FOMC meeting minutes. Quick note here, this is not the FOMC, this is not the rate cut, this is not the rate hike, no rate decisions. FOMC minutes is just a regular red folder. Don't confuse it with the actual FOMC. Thursday, no news, and January 10th on Friday, we have CAD red folder, and of course the big boy NFP. NFP protocol, that means the day before NFP, the session before NFP, I wouldn't recommend. Betting the farm, of course, if you see an entry, go ahead. But I will be mainly looking at trades at non-US pairs during those days. Okay, that's Forex Factory. Let's now dive into the chart itself. So currently we are on DXY on the weekly, and we opened the week today with a big down candle. It's in the 1 hour. Look at this big one hour black candle, red candle. And when I see a move happening like that early in the week, I'm always very curious. Like, hey, why are we going here? What could be behind this? And then you go to the higher time frames on the daily. Not too much to be seen, but if you go to the weekly, it's very clear. Weekly order block plus for value gap. This is a high probability order block. And why? This down close candle trades into a for value gap. That makes this a high probability order block. So I'm expecting price short term to trade towards here. That's the 107.50-ish. And then I want to see if we react to the upside. I'm favoring that one. Or if we don't do that, the alternative here is we trade towards the order book. But because of that, and then we need to look at the candle closes, we can potentially break structure. This is the last swing low that made the high. If we break structure and create a bearish fair value gap on daily, we can potentially be looking at a market maker sell model. So two flavors. I'm anticipating both. I would say my main ideas are going to be longs from the order block, so short-term shorts for DXY, then longs. But I don't want to fade a potential market structure shift. But for now, that's not the case. For now, we're just still bullish, highly bullish. So I'm going to trade according to that. So if you are bullish on DXY, that means bearish on the USD pairs. And in the weekly fair value gap, we'll see which one we're actually going to do. Cool. Then JPY basket. I mentioned this already a few times, that I think we are primed for some nice shorts on the JPY. And if the JPY basket goes lower, just like if DXY goes lower, then the JPY pairs will go up. It's inverse correlated. So if this goes down, the JPY pairs, so Euro JPY, JPY, will go up. And we have a weekly bearish fair value gap here. We have a daily bearish fair value gap here. We have very clean lows here, with also a weekly bullish fair value gap and a breaker. So that area is a very big point of interest. So I'm highly biased towards longs for JPY. And there are 3 on the list. We're going to discuss that in a second. So lower JPY, higher JPY pairs. Then AUD NCD. AUD is still stronger than NCD. And Euro is still weaker than GBP. So if we're going to long, I would prefer longing GBP XXX instead of Euro XXX. And then let's go to the indices. Most of you trade NASDAQ, ES, and YM. Let me add ES to the list as well. I mainly trade NQ. And I think we have a very nice week coming up for the indices. So we opened up very bullish this week, which is good. And I want to bring your eyes to last Thursday, January 2nd, because here we took the December low. But the thing is, ES didn't, creating a SMT on the higher time frame, which is very nice because that indicates that we possibly want to go to the other side. So went lower, now I want to go higher. So low-hanging fruit target for me, it's going to be these highs. After that, all-time high, which I think we will get on a technical level. But also don't forget rate cuts, new president. It's very bullish for the market. That's more fundamental. But let's stick to technicals today. So I'll be personally looking at longs from this 4-hour fair value gap, which I'm going to try first today already. If price allows that, of course. If price does not allow that today, then I will be taking a long higher up the range. If we sell off like crazy today, like a very big down close candle, then I'm expecting longs from this fair value gap. So if we see that very scary move down today, don't panic. We're just waiting for this basically to hold. So longs from this one. Then it's the question, okay, what could stop this move from happening? And that is this daily bearish fair value gap. I'm not expecting that one to hold, to be honest. And that has to do with the SMT at the downside, the displacement. And don't forget, let's zoom out more on the weekly. Zoom out, look at how bullish we are. And look at how the candle closes in this weekly bullish fair value gap. Look at how the bodies respect the 50% of the fair value gap. Consequent encroachment, indicating price wants to go higher. Indices will go higher. Again, money is being printed every single week. lots of money coming into markets. So don't fade this. So I have a strong bias for longs for the indices. So also for ES, also for DAX, for YM, all indices basically. Similar for ES. Then the DAX, the German index, I noticed, and also one of my inner circle students told me this, is the German index and the NASDAQ are very similar. They move quite similar. So also for the DAX, I don't think this weekly CB is going to hold. Like we are now in a weekly BISI and CB at the same time on the German index, and that makes it lower probability. If you dive deeper into this, I think we're also going higher. But I won't chase this yet. I want to see more structure. And with structure, I mean, I want to see in 3 hours a fair value gap created, then we respect that fair value gap, and then we go higher. And I'm waiting for this move to be completed, and then I would probably be here looking for entries, and that will probably be Tuesday, Wednesday, Thursday. So for today for the DAX, I'm leaving it. Anticipating we go higher, and then when your retracement comes, I'll be looking for entries. Similar what I do with ES. I anticipating price to go very high, aggressively, but I wait for the retracement. And if you know where to wait for, patience becomes easier. I know many of you struggle with that. Okay, cool. Let's go over the USD pairs. USD pairs are biased for DXY. Well, we're still going lower, so that's very interesting. Again, for DXY, short term, lower towards the weekly bullish fair value gap and order block. So between short term, the USD pairs up, and then I'm anticipating maybe we'll go higher, but short term, maybe today, I'll be looking for longs for the USD pairs, and of course, that is visible on the charts as well, longs. And same for DXY. From the weekly BISI, I'm quite neutral. Like we can respect the weekly BISI to go higher on DXY, or we're gonna respect a little bit, and then from the daily BISI we sell off. I don't care which one we're gonna do, because we're gonna be in both, whatever happens, because we wait. So here's one. Let's say DXY still drops lower, disrespecting the weekly BISI, which is possible. Then I'm anticipating this move to start happening on Euro US dollar and market maker buy model. So when DXY fails to go higher, I'm looking at the market maker buy model for the USD pairs here as well. And I'll be releasing a short this week, both on Instagram and on YouTube, how to play market maker models. And that's going to be exactly this. So make sure you follow on Instagram and YouTube, because this can play out exactly like that. If it doesn't, and DXY still goes higher from the weekly BISI, I'll be looking again at shorts for the USD pairs. And that's the question. Where are we going to short from? Well, this is a massive, this up close candle here. The green candle is a massive weekly bearish order block. And why is this a weekly bearish order block? This up close candle trades into a weekly SIBI, and it goes lower. So the mean threshold, the 50% of the order block, could be nice to be respected. Let's do it here, the 50%. So let's see if we are going lower or not. Short-term low, short-term higher for Euro US dollar, but later in the week. And also it's NFP week, so USD pairs in general. Let's wait. Let's get more information on this. And if you think I'm wrong, which you are free to do, then take a trade, do what you want. But I'm gonna play it like this. Same for GU. Let's see if we're gonna break structure and hold structure. That's even more important. So if we break structure, what we do right here, then we need to hold structure in a newly created fair value gap before our entry model becomes valid. Same for AUD USD. We just have our first displacement. So we took liquidity here. Took liquidity right here. Then placed up a little bit. Respected this 4-hour fair value gap. And now we're creating a, potentially in 2 hours from now, a second fair value gap, which you can use to then trade higher. Similar for entity USD. and that's how I'm gonna play the USD pairs this week. That all depends on what DXY is going to do. I think at the end of this recording, the time of recording right now is 7. So maybe at the end of the recording, we already did the weekly busy. But during live training today, we'll discuss how DXY can be played. But you already know, just wait for the weekly busy to hit and let's see what we do. Price will show its hand. Then CAT, we have one red folder for CAT that is later in the week. And for GCAT, I am looking at the higher time frame. On the weekly, we have aggressive sells, aggressive buys is very bullish with a weekly bullish fair value gap. And the bodies are respecting 50%, making this on a weekly a very bullish trade idea. Then on the daily, we have this breaker right here. Close candles here. We have an order block right here. And we are respecting that order block. The only thing that could mess up with this long idea is the daily CB right here. So I'm going to monitor that. If not, and I'm actually expecting this to go higher, then we now have fair value gap 1 right here. I want to see expansion into New York today or tomorrow. And then the second fair value gap, I'll be looking for entries. Entries are going to low-hanging fruit highs. It's going to be these highs first. And maybe if we continue doing this, I'll take another entry here and then target the second highs. So for the challenge, you can look at something like this. Target 1 to 2, something like this, entry 1. Then when price comes back here, I'll be looking for another entry. That will be below a swing low that's created, for example, this swing low right here. And to the highs for another 1 to 2, 5, something like this. And I want you to note what I'm doing here. Because this whole frame is only based on the weekly. See how powerful it is? If you have a daily, weekly, monthly, so basically the whole weekly outlook, if you know your higher time frame levels, then you can drop to the 1 and 4 hour to spot things like this on the 1 and 4 hour. And using that 1 and 4 hour idea, you can then drop to the 1, 5, 50 minute to go even deeper and maybe take intraday or scalps. So this is what I'm looking at 4 hour. And probably when we are doing this on the 4 hour, I'll be dropping to the 5 and the 50 minutes to refine the entry even more, to get a more precise entry and make more money basically. So of course this is a GCAT example, you can do this on every pair. Then Euro JPY. If you remember JPY basket, we have a strong bearish bias. So that means longs for JPY pairs. Well, Euro JPY, we have a weekly busy right here. And also the daily structure is lining up. We have failure swings here. We have low-hanging fruit targets. So Euro JPY looks very nice for longs. Similar as GCAT, I want to see what we do with this daily CB. I want it to be disrespected. GP JPY, exactly the same. So we have a liquidity sweep here. Displacement high for value gap. Looks like we want to respect this. Also on the daily, looks very nice. We're respecting daily bullish arrays and disrespecting premium arrays. That's what you want to see when you are bullish. So also GP JPY for longs. If you are hesitating between Euro and GP JPY, long, the strongest one of the two, Euro JPY, which one is the strongest between Euro and GBP? Go to the higher time frame, the strongest is GBP, because Euro JPY goes down. That means Euro is weaker against the pound. So pound stronger, Euro or GP, I would then long GP JPY. You can do both, but expect the strongest pair to move faster to the upside. And that's if you want to make money. It's nice to be in the fastest vehicle. Then GHF JPY. We have GHF news coming up later this week. And I'll be looking at the following. We are trading into this daily order block. And we're also in this daily bullish fair value gap. But similar as more pairs, we have a counter array coming up here. And that's the bearish fair value gap. So I'm gonna wait for the red folder to come to see which one are we respecting. because we will react from one of the arrays, and then we say, okay, now we know if a bearish idea or a bullish idea, and we'll trade accordingly. And then for gold, gold's one of my favorites of this week. I have a low hit rate on gold. It's always like a meme with my students, also with people I trade with. I don't trade gold a lot, but using the concept in my model, this looks very, very nice. So I'm looking for longs for gold. It has to do with first the weekly busy right here. Then we drop one time frame lower. We have the daily, and the daily we went higher, and then we came back into this overlapping part between an inversion fair value gap and a fair value gap. It's a balanced price range. Let's make it a little lighter. So ugly there. There we go. Then we traded higher. We came back, and now we displaced higher. So from this move, we down close candles. It's an order block. And now look at how price comes into today. Comes to the fair value gap and order block and goes higher. It's a very bullish sign. So then what I want to do, drop to the lower time frame on 4 hour. Also on the 4 hour, we came into this 4 hour fair value gap, and looks like we want to respect this. So another time frame says bullish. Let's drop to the 1 hour, also overlapping 1 hour, and also the 1 hour order block. Why is this an order block? Because the down close candles trade into a fair value gap. So many arrays, discount arrays, are hinting that price wants to go up, and I think this is going to be a Monday trade already. I want to see how we do in New York. If we create this fair value gap, then I'm expecting a 8 or 9 a.m. low to then go to the high. So therefore today there will be a trade for something like this. Similar for silver. Silver is stronger, and you see the structure even clearer here. Similar as gold. We have a weekly bullish fair value gap. On the daily, and also here this daily fair value gap right here, we respect it. And now we have a little breaker sitting here. So lots of bullish momentum for the metals here. So I think Nasdaq is very nice. I think gold is very nice. USD pairs. Depends on how we respond to the weekly busy on DXY. GPY pair is very nice. So all in all, big list, lots of opportunity. Keep in mind, it's NFP week, and we are at the start of the year and the month. So if you see slow delivery, you can apply the same trade ideas. If price just didn't move, if we just consolidated the whole week, you can use the same ideas for next week. Of course, next week, also weekly outlook. And this week we have a Monday New York YouTube stream. Not on YouTube, by the way, this week. This week's on Zoom. Links will be shared in the Telegram, just with the trades I take on a 0 to 1 million challenge. So make sure you are in the Telegram. Go to DionTrades.com, go to my socials, go anywhere. The Telegram is there. And make sure you tune into the live trading on Monday. Also on Tuesday, London session. Also on Thursday, London session. And I also have a new 2025 mentorship videos coming out. So lots of value being dropped this week and also every single week. So thank you for watching, and I hope you have an amazing trading day, trading week, and can't wait to crush it together. See you.